In this video, we're going to talk a little bit more about credit score, and specifically, we're going to use this website called Credit Karma. I recommend that you all get a account set up with Credit Karma because it basically allows you to track your credit score for free and gives you a lot of information about your score and kind of the trends of what's happening with it over time. It also has offers for you for different financial products. That's kind of their business model, where they provide you with your credit score information, and then in exchange, they kind of advertise to you. But anyways, I think it's a really good tool for managing your credit score and kind of keeping track of it. They send you periodic email updates and kind of remind you to check in. So when I first log on, I see my two scores here, and it gives me two different credit bureau scores. One is with Equifax and one is with TransUnion. And then you can basically click on some of these offers that they have. I'm not really interested in that. I'm just going to click on my score to get more details. So it's pretty nice. It gives you kind of a trend for the previous couple months, and you can see it compares last year with this year and also kind of the trend over time for this year. So, I'm pretty much within the same kind of ballpark range as I was last year, and also even this year. It's kind of zoomed in under this pretty small range of scores from 816 to 804. So I'm not too worried. I think it's just normal. The ups and downs of my balance change a little bit each month, so I'm assuming it's related to that. So this is kind of nice. It gives you a breakdown of all the different components of the factors that go into your credit score, and it tells you actually which ones are high impact, which ones are lower impact and medium impact, and it lets you kind of dial down and explore each one. So for example, let's look at credit age. You can click here to view more details, and it kind of gives you a breakdown: your oldest account, your newest account, the average age, and even gives you the details on all the different types of loans that you have that they're tracking. So you can see I have 3 credit cards. I have a real estate loan. I have a student loan, and also they kind of give you these factors were on the other page, but it kind of gives you the option to click and dial down into these again. Let's just go back so we can keep track. Credit card use. So this is another high impact one. And so you see that I have a total of $33,500 of credit card limit, and I'm using a very small percentage. And again, the video I did on credit scores, if you recall, the credit utilization is a really important number, and you want to keep it as low as possible. So I have high limits on my cards, and I use a very small amount of it, and I'm on the basically paying off my balance every month schedule. So this will go back to zero the next time a credit card statement is made, and this credit card usage will go to zero. And then that kind of just happens every month. You can see derogatory marks are collections, tax liens, bankruptcies, or civil judgments on your report. So these are high impact. I don't have any. So that's a big part of why my score is high too. And then payment history, percentage of payments you made on time. So I've made 100% of my payments on time or very close to it. So that also has a really high impact. Hard inquiries, we kind of talked about this. This is the number of times I've applied for credit. So let's see when I applied. So it looks like there was one. I don't quite remember what this was for, but it looks like there was a hard pull on my credit in July of 2020. And it looks like these stay on your report for up to 2 years. So that's why it's still on there. But I assume it'll drop off in maybe this year sometime. In any case, it is a low impact factor in your score, so I'm not too worried about it. And so it also does the same kind of analysis for the other credit score I have with Equifax. And you can see it's pretty much the same numbers. You can see one difference though is that they have 14 accounts while the TransUnion only had 12. So there must be some accounts maybe that I closed or have zero balances that are in the Equifax, but were not in the TransUnion. But in any case, the credit card usage percentage is the same. So I assume maybe these are just two older accounts that have been closed. And so, yeah, this is a really useful tool. Again, you can see even what's changed. This is pretty helpful. So it kind of goes through what the changes in your credit report were in the period, and kind of explains why your score is changing. So you can see here I had a balance decrease, so that was it helped my credit score. My score dropped 4 points in this month. So let's see what happened. My balance increased, so I just spent more on my credit card, and it was not offset by the balance decreases, so that's why my score dropped 4 points. But a 4-point drop, it's going to go up when this balance gets paid off. So it fluctuates up and down kind of in a range based on just these kind of micro factors that are going on. And so, yeah, I recommend, again, that you sign up for the website. It asks for your social security number, and through that, it's able to pull up all your loans and kind of credit cards and auto loans and student loans and all that.